Suppose in a question you are given two balance sheets. Opening balance sheet as on 31st March 2010 and closing balance sheet as on 31st March 2011. I'm going to prepare these two balance sheets in a columnar way. I'm going to say two amounts column on left side and two amounts column on right hand side. I'm going to say for asset side. Okay, asset side, cash 6,000, 16,000 means last year the cash was 6,000 but now it has got 16,000 means there is increase of cash of rupees 10,000. Furniture 5,000, 5,000. Building 0, 5,000. Total 11,000 and 26,000. Liability side. Capital 10,000, 20,000. Loan 0, 4,000. Loan means long-term loan. And provision for depreciation on furniture 1,000, 2,000. Total 11,000 and 26,000. And additional information is fresh capital during the year 2000. And you are asked to prepare cash flow statement. You know, in cash flow statement, all cash activities of the year are grouped into three parts: operating activities, finance activities, and investing activities. Investing and finance activities, they are written individually, item by item in cash flow statement. But all operating activities, they go to one pool, and the net result is cash from operation. So let's come back to the question. First of all, prepare the capital account for your convenience. You know, capital account, its format on credit side, by balance BD 10,000 and to balance CD 20,000 rupees. So on credit side, by fresh capital 2,000, and debit side you have to write down two drawings. And on credit side, by net profit, and on debit side to net loss. These are the three items on both sides. So by balance BD 10,000, by fresh capital 2,000. It's clearly instructed in the question that there was fresh capital of rupees 2,000. And to balance CD 20,000. So the total on debit side is 20,000. The total must be the 20,000 on credit side. But on credit side, the total is only 12,000. It means one item is missing. That must be net profit. So this is the balancing figure, rupees 8,000. So one thing is clear. This firm has earned net profit of rupees 8,000. Now pay attention to the provision for depreciation on liability side. What it means. This firm is providing depreciation but not directly. They are providing depreciation through provision. I would like to remind you here that if there is provision for depreciation on the liability side, it means the value of the asset on asset side is at the gross figure. Means this furniture, you can say 5,000, 5,000. This is the gross value of the furniture, not net value. I'm going to make two columns as on 31st March 2010 and 31st March 2011 in my working notes. The book value of furniture is 5,000 and 5,000 less provision for depreciation 1,000 and 2,000, and the net value of furniture is 4,000 and 3,000. These are the presentation of the furniture and provision for depreciation on furniture. Furniture was 5,000, now still it's 5,000. It means no furniture was purchased, no furniture was sold. But the provision for depreciation was 1,000 last year, now it is 2,000. There is jump of provision for depreciation of rupees 1,000. It means this year this firm has provided depreciation on furniture for rupees 1,000. If you imagine the profit and loss count, how do you imagine it? There was net profit 8,000 and on debit side to provision for depreciation 1,000. and there must be some other items. I don't know about that, but you can imagine these are the two items. This way they have been placed in profit and loss account. Now we have to prepare cash flow statement. You know, before you prepare the cash flow statement, you have to calculate cash from operation. And you know, cash flow operation means net profit rupees 8,000 plus depreciation 1,000, because this is non-cash item on the debit side of profit and loss account. And on the basis of available information, I mean to say additional information and the balance sheet, I don't find any item which should be added or deducted from the net profit. So cash from operation is 8,000 plus 1,000. That will be 9,000. Now I'm going to prepare cash flow statement. You know, when cash flow statement is prepared, it is prepared in T-shape, just like balance sheet. On left hand side, inflows, then column of amount. On right hand side, outflows, then amount. So when we have to prepare cash flow statement, we should look at all the information one by one, and let's see which is useful for our cash flow statement. First of all, fresh capital rupees 2,000. It means the cash has come to the firm, means cash has been generated. This is finance transaction, you know, fresh capital and drawings. They are financing activities. So fresh capital will be written down on the inflows. Fresh capital rupees 2,000. And now cash column. Opening cash 6,000 on inflow, and on outflow column closing cash 16,000. I have taken these figures from the balance sheet. Then furniture. No furniture has been purchased or sold. Yes, there was some depreciation which has been added back to the net profit. Building was previously it was 0, now it is 5,000. It means building has been purchased. It means payment has been made. Be careful. Buying the asset is investing activity. So on the outflow side, building purchased rupees 5,000. Now please come to the liability side. Capital. Because capital account has been prepared, it will give you all the information. There was fresh capital of rupees 2,000. I have already written in the inflow. So far this net profit is concerned, it has gone to the cash from operation. So everything has been handled. Now, so far this provision for depreciation is concerned, it has been taken to cash from operation. So cash from operation was net profit 8,000 plus 1,000 depreciation, total 9,000. So this cash from operation will be taken to the inflow side. Cash from operation 9,000. Loan. Previously it was 0, now it is 4,000. What it means? Loan has been taken. Rupees 4,000. So this is the inflow. So in this way, the total on both sides will be 21,000 rupees. Both sides are going to agree. It means my question